Hi, I'm Joe Neighbour from Signal Centre, and this is the latest roundup on the FX markets for you all from a technical perspective. Just a quick roundup of the latest headlines and what we've seen overnight. The risk appetite, to some extent on Wednesday, improved in some of the asset classes that we cover. The dollar drifted lower as yields retreated, although moves were fairly limited, as we'll come on to shortly. Euro US dollar advanced to 1.1350 as the German benchmark yield broke above 0% for the first time in a very long time, and sterling posted limited gains yesterday, with euro sterling hitting fresh 23-month lows before posting a mild correction. So not really lots going on in the FX space, and that is evidenced in the charts as well today. So we've got the dollar index daily chart in front of you at the moment. Overall still remains bullish. As we can see, the chart is moving from the bottom left to the top right. We have seen a bit of a pullback in the last week or so, and that has found support at that blue line that we have highlighted on the chart at 94.74. That's relevant because it's this previous swing high that we posted back in September before breaking out above that line in November last year. So we saw a fresh push to the upside, and now what we've seen is a retest of that support, which so far has done a pretty good job. As you can see, we posted this bullish engulfing candle on the 14th of January, and prices have continued to move higher since then. Over the last two sessions or so, we have seen a little bit of a retreat. We are lower by almost 0.15% as things stand today, but overall the view remains bullish, and we are expecting to see higher prices. So when yields are starting to rise, as they have been in the US 10-year Treasury, and then we're expecting dollar to continue moving higher in line with that. So let's take a look now at Euro US dollar, the flip side of what we've just talked about on the dollar index chart. As we can see, the price continues to move lower over the more medium term. We are trapped within this downtrend resistance at the moment. We are forming some sort of consolidation which has been ongoing for the last few weeks. Really, this started back at the end of November. We posted a bearish engulfing candle on the 14th of January, and prices have moved lower since. But we are still within this kind of consolidation channel at the moment. So while we remain within that, I think what we can expect to see is a continuation of this kind of choppy price action in the very short term. I've just drawn this blue line on here at 113.14 because I believe if that level is broken, then we'll also see a break of this short-term consolidation channel as well, and that will probably lead to a continuation lower in price. We've still got targets down at sort of 110.58 down to 109.95 on Euro US dollar, and that is still the outcome that we expect to play out over the coming weeks. But it's not straightforward, and we may continue to see some sideways and choppy price action in the short term. Taking a quick look at cable, that stalled into this 50% Fibonacci retracement level at 137.05. So that's a measurement from this high here that we posted in May last year down to these lows that we posted in December. We've seen a nice sharp rally to the upside into this 50% Fibonacci level, which has been respected quite well. And then we've also seen a break of this short-term up move that we've seen in cable, which broke here on the 17th of January. So we're still below that. Yes, we've seen a couple of days of strength. Whether or not that's enough to invalidate the bearish overall view on this at the moment, I'm not entirely sure. I still think we're going to see more from the dollar index, and we will see the dollar outperform sterling over the more medium term. So keeping an eye on this for now. Still think there could be some choppy price action, but my bias is still for lower prices. Finally, I'm going to take a look at euro sterling. So this continues to look really sad, unfortunately. If we go back, further to the left-hand side, we can see that price has continued to move lower now for many, many months. We did see a bit of a revival here post the initial shock of the pandemic, but that topped out around here at 92.91, and since then prices have just been really on a pretty steady move to the downside. We were trading in this channel, as you can see here, highlighted by these red bands, but we broke down below that and simultaneously taking out a horizontal support at 83.82 back in the early part of January. And since then prices have been quite sideways overall, but continue to move lower. We did maybe see a bit of an attempt at trying to turnaround on euro sterling on the 18th of January, as is posted here on this candle. You can see we made an attempt to get above this resistance at 83.80, but it failed pretty spectacularly actually, and actually closed the session on the lows of the session, or near the lows of the session, forming that bearish engulfing or bearish outside day candle on the daily chart. Yesterday we saw a bit of indecision. As you can see here, we've posted a doji candle, so we pretty much closed at the same price that we opened, and we're not really getting any further direction on that today. We are flat on the session as things stand, posting yet another doji candle. Of course, a long way to go in the session before we can make any well, we can look at the pattern of what the candle has been posted today. But what we did see yesterday, as you can see if I just scroll in here, is a new low. That was a 23-month low on euro sterling. Now we've go back to the left hand side, we've got this black line that we've highlighted as support. This is this previous low that we posted back in December 2019. We've also got another low there from February 2020. This looks to be the level to target on the downside, and I can't really see anything that's going to prevent that from happening. We're not seeing any sort of bottom formations take shape. We're not seeing any sort of rounding price action at the moment. So it does look as though this trend is set to persist, and we are going to head lower towards that key support at 82.75. So that's a short-term target on the downside. Of course, how it reacts around there will be very interesting as well. If we break that level, then we're going back some way to find out some next support levels on euro sterling, and just by eyeballing it now, I'd probably be targeting the high of that candle there on the 5th of April 2016, which is down at 81.17. So the outlook doesn't look great, but we'll obviously have to continue to watch the price action over the coming weeks and judge it as we see it. That's the roundup from me. Hopefully it's been useful. We'll be back next week with some more roundups for you all on the technical front. Until then, good luck everybody, and trade safe. Goodbye.